I'm Richard Kateley from Legal & General, Head of Intermediary Development, and passionate about protection.
Fantastic.
And I'm Robert Sinclair, the Chief Executive of the Association of Mortgage Intermediaries and the Association of Finance Brokers. And also, I believe, passionate about protection.
Yeah, I think so. Fantastic. Right, so let's make a start, guys. So the first question is, what are the big opportunities for mortgage advisors in 2021? Who wants to kick us off?
Shall I go?
Yeah, go for it.
Well, I think 2021 has already looking like a great year, both for the purchase market and for the remortgage market. There's a couple of really big lumps of maturities of fixed term mortgages this year, which means there's a great opportunity for brokers to go back, talk to their customers, get them a new mortgage deal which is probably cheaper than the one they're on already, which then frees up an amount of money so that they can talk to them about what they use that money on, particularly by way of enhancing their protection, whether that's life, critical illness, or income protection. And so with that money, we can really begin to push into improving the protection gap and making sure that in a post-COVID world, people have got the kind of cover that they probably want or should have had going into COVID that they didn't have. And I think also in the world that we're in at the moment, where a lot of people are looking to move house or buy for the first time, we're going to see people on 95% mortgages. The need to get those protected as well is critical. So I think there's great opportunities out there for intermediaries across the marketplace. And I'll leave Richard to talk a little bit perhaps about what the protection community is doing to enhance their offerings in order to support mortgage brokers.
Yeah, I think for me, the opportunities very much mirror what Robert's just said. I mean, the remortgage market, the product transfer market is massive this year. And for me, one of the concerns I think in the past is advisors have perhaps missed some of the opportunities in that marketplace, where the direct lenders have really come in to their own to try and do that. There have been several reports about how 70% of new mortgages go through brokers, but when it comes to the remortgage and the product transfers, they lose about 70% of that. So it goes from 70-30 in favour of the advisors on new mortgages to 30-70 in favour of the lenders advisors on the repro. So for me, the big opportunity for advisors is to make sure they're not missing that opportunity. The risk of missing out of that opportunity is huge as far as I'm concerned. The other area for me this year, and it still hasn't been cracked really by anybody, is the rental market. And we talk about mortgage advisors, but those mortgage advisors also have an opportunity to go into the rental market. I always find it amazing that if I'm a client and I go into an estate agent and I'm buying a house, the likelihood is I'm going to be passed to an advisor to get some advice on that. If I'm a client renting and I go into that same estate agent, the likelihood is I'm not going to get talked to anybody about anything on the protection side of things. Yet probably the person renting has got a bigger risk that they're running because their landlord's not going to give them a payment holiday like the lender might do. So actually, why are we not talking to these? And I think it's an opportunity for advisors if they're looking for a new market. I know mortgage brokers are really, really busy at the moment. They've got probably enough business, but actually this is a huge opportunity for people to get into.
I think you're right, Richard. I mean, and Rishi mentioned in his budget this week that he was trying to convert generation rent to generation buy. But whilst they'll move a lot of renters to buyers, I think there'll be a lot of backfilling as well of people newly coming into the rental market as well as people move back out of living with their parents' home as they've had to do with COVID. So there's going to be great opportunity for people in that market who are going to be moving back into rental to be talked about protection as well.
I think that risk of missing an opportunity. There was a report by the TSB earlier in the year about how much people can save by just moving their rate. A lot of people we're very lazy, aren't we, as a public? We don't tend to move our bank accounts, we don't tend to move our broadbands, etc., because we think it's going to be too much hassle. And the TSB report really showed that actually by moving your lender or moving the product you're on, going on to a different fixed rate, you could save up to $2,000 a year. A lot of advisors say, well, clients they can't afford life insurance. Well, that's a great opportunity. If they didn't buy the life insurance to start with, then if they're now doing a product transfer and they're jumping onto that bandwagon, then if they're saving their clients some money, that client's now got some spare cash. So the protection side of things, whether it's income protection, life or kick, is a great opportunity again for that advisor to maximize their commercial opportunity, because let's face it, they're business people at the end of the day. And yes, we should be doing the right thing, but commercially, they need to look at every opportunity they're getting out of a client. So if you're doing a product transfer where you're probably going to get what, half the bit prop fee than you would on a purchase, then why not fill that gap with some protection sales? And it's probably easier than some of the other stuff they're doing. So for me, that's along with the rental side, that's a huge opportunity.
I mean, a good business in this marketplace will be taking 40% of its income from the procuration fee, 20% from the fee they charge the customer for the work they're doing for them, and 40% from their income from the protection market. And if you're not meeting that across the board, then you're probably not as productive as you could be.
Excellent. Thanks, guys. That's great. Moving on to the next question. What if mortgage advisors don't want to sell protection? Are they wrong, and why? Interesting one.
I'll start with that one if you want.
Sure.
Yeah, get me out the hole, Richard.
Get you out the hole. I think they're wrong if they don't mention it. I don't think they're wrong if they don't want to do it. As far as I'm concerned, if you're a financial advisor and you're or a mortgage broker and you're telling a client or helping them to arrange probably the biggest debt they've ever had, if you don't at least say to them, you need to consider this, then I don't think they're doing their job correct. But I think there's no reason why they have to do it themselves. And again, going back to that commercial aspect of being business people, why just leave it there and say, you should go and consider it. I don't want to do it for you, but you can go and do it yourself. Why not arrange or have an agreement with an introducer so that at least you can get something back on that introduction, and the client's going to be looked after and they are going to be talked to. But yeah, I do believe that if a mortgage advisor doesn't at least mention it, I think they're probably doing something wrong. I don't know what Rob thinks, but that's my view.
I mean, one of the things that we did as we began to promote the protection agenda more within AMI last year was we did some consumer research. And that research kind of indicated that 97% of mortgage brokers thought they'd had a really good protection discussion with the customer, but much closer to a third of customers remembered that conversation to any degree. So what I think is a fundamental here is that we need to make sure that every broker has a memorable conversation with the customer every time about protection. Now, whether they want to do it themselves or not, I think is a moot point, but they should be having a discussion that says, you really need to think about this, Mr. Customer, because you're just about to borrow all this money. What happens if the cash machine, which is you, isn't there to pay for it? And therefore you need to think about that in a meaningful way. And that positive discussion, which is not seen as an apology, but seen as a really constructive element of the advice, has to be front and center of the discussion, not just about, I'm going to get you the mortgage, but I'm going to get you the mortgage you can always afford to pay, as being something that customers are more liable to remember. Whether they don't want to do the sale themselves or not is about how they then deal with that interest they should have generated with the customer. And there are plenty of firms around that will take that lead from them and complete the transaction and share the commission around that. Or they can employ somebody else within their business who become a protection specialist who can do that work for them. And that would work as well. So whether you're self-employed, directly employed, in a network, there's always another way to do this if you actually want to do it, in my view. The challenge is making sure you set it up in the first place with passion and enthusiasm to say that I think this is really important for you, to make it a conversation the customer does remember, can recall, and actually, if something goes wrong later, can remember that they said no if they've said no, as opposed to saying, oh, well, you didn't really cover it off, which is the worst place any of us can be in this debate.
Spot on, Rob. I think, my boss, Craig Brown, was out the other day saying that an enthusiastic advisor is infectious, and they really are. If you really believe in what you're talking about, there's different levels of advice out there. There's those that do stuff because they're told to, those because they want to, and those that really believe in it. It's the ones that really believe in it are the ones that are the top salespeople. And it's not necessarily about always talking. I guess it's about listening. For me, the best salespeople are those that listen to their clients. But we have to use the right language when we're talking to the client. And if we don't use the right language, and I'll go with the word protection. We did some research back in 2019. And when you ask the general public what they think about the word protection just on its own, they either think it's about protecting themselves against personal violence. They either think of nothing at all because it sounds like a boring word. The third one is about, excuse my language, but about sexual protection. And the fourth one is about high vis and PPE. It's the fifth thing that came out of that research, which was talking about the stuff we sell about. So again, it's using the right language of the clients, getting their engagement, as Robert said, and getting their enthusiasm about that idea, and actually at least going to talk to somebody. So Robert's right, it's just about use of language.
And there's another element to this which we have to think about as a sector as well, is that I still come across too many advisors who haven't got the products themselves. Yeah. And that's not a great place for us to be. and I'm not saying that everybody needs income protection, but certainly they need to have an honest conversation with themselves about what they might be leaving behind if anything unfortunate happened to them. And actually, if you've not got the product yourself, how can you genuinely sell it to somebody else? And that's part of a discussion and debate I often have with firms. And we need to be a bit more honest with ourselves, I think, about some of the shortcomings that we have within our industry.
Some of the advisors are a bit like builders, aren't they? I live next door to a builder, and he does some fantastic work, but his own house is a rubbish, and it needs a lot of work done to it. But I mean, all I've done in recent years when we're doing presenting and training to advisors is just reflect back what other advisors tell us. And the number of advisors that say, actually, I have a stack of my policies on the side of my desk. So whenever a client comes in, I say, I believe it. There are my policies. And he actually hand them to the client and with his name on them and everything else. So I believe in it. But you're right. If you don't believe in it, you don't have it yourself. What is the point?
Absolutely. Great. Thanks, guys. Moving on, have the stamp duty changes helped or hindered the mortgage market? This is obviously becoming a little bit more apparent now we've heard from the budget. So I'd be really interested to hear what you guys thought about that. Obviously moving away slightly from the protection side of things, but it'd be great to hear your point of view. The cynic in me said we've moved from one cliff edge to two cliff edges, which is an interesting challenge in itself. The buzzword of the moment is cliff edge.
Oh, I tried to get people to change it to the guillotine, but nobody else picked it up because they thought it was far too complicated. But we're still in this space where we've kicked the can down the road for 3 months. And my biggest worry is that what we end up with here is a whole load of new transactions piling on top of the pile we've already got. Yeah. And actually some of those getting underneath in the pile and people who've been on that pile for a long time still not getting to the point of the benefit of the reduction that they think they're going to get. So I think the challenge here is that what actually should be happening here, which is both challenge and opportunity, which is we need to be having conversations with everybody in the pipeline to make sure they understand what they need to get done by a certain date, which is now for most of them the 30th of June or a fallback the 30th of September, depending on how much they're dependent on that stamp duty reduction to be able to complete the transaction that they're involved in. So there can be a good discussion about that. But then also a discussion that might revisit protection because it might have got sidelined in the first conversation because everybody was rushing to get things done or didn't want to talk about it then because they weren't sure it was going to proceed or not. But where we've got certainty now about dates and timeframes, we can go back and revisit everything and make sure everything's bolted to the floor and go back and revisit and make sure, has everything proceeded? Have you had the medical done? Is it all been accepted? Are the terms okay? Have good positive conversations about what's going on there because we've got that bit of time now. We know it's really busy at the front end at the moment because activity through the sourcing systems has gone up by 10% this week. So we can see a huge surge in activity of consumers interacting with brokers. Now that means we've got great opportunity to have good discussions about the whole piece, but we have to manage the pipeline as well. And it's critical that we go back and make sure that every customer understands exactly what they need to do by the due date with their conveyancer in order to get the transaction over the line in time. But make sure they've bolted everything else down at the same time to do the great advice job that I know most advisors genuinely want to do.
Mm-hmm.
I hate to keep agreeing with Robert, but he's totally right. I mean, as somebody that's trying to sell a house at the moment, I know, I'm sorry, mate, but as somebody who's trying to sell a house at the moment, I know the pain people are going through with the queue in conveyancing and getting the legal side. The selling it bit is the easy part. But again, for advisors, I think the opportunity for them, because we know we've got this huge chain now of properties sitting there and they've got a lot of money locked into these chains, is if they haven't sold the protection, go back and talk to them. Go back and talk to every single client that's sitting in a chain at the moment, revisit them, see how they're doing, give them an update, and then say, oh, by the way, we didn't talk about the protection. Because a lot of research has shown, there's some stuff out from The Guardian the other week about talking to clients and the reason they didn't want to take it. And they say, well, I haven't got time to do it now. I don't want to do it now. Well, go back and revisit them now while they're in that pipeline. if that's causing the advisors a lot of strain and stress because they can't get the cash flow through, going back to that, we are business people at the end of the day and we need to survive with cash flow, then luckily we've got the product transfer stuff on the background as well, which, okay, let's leave that stuff in the new business sitting in the pipeline. We've done everything we can on the protection side of things. We're not going to get the proc fees until it's completed or exchanged. Let's see if we can supplement our cash flow by actually going back into, okay, let's dive into our data bank and see what clients are going up to product transfers and see if we can't then go and revisit them and sort of leave that. Because I do think sometimes, and especially in the mortgage market, we do tend to be very transactional. It's a client is a client as good as a house, and then we move on to the next new client and the next new client. We don't tend to have a client bank as we used to and service them and feed off that client bank all the time. So I think, again, in situations like this, I have no doubt that the stamp duty thing has helped the market. It's made a lot of people think, actually, I want to move. There's a lot of research that was done last year by people saying, I want to get out of cities and I want to go and live in the countryside, because being locked down in the centre of London or Birmingham or Glasgow was not the best place to be. I want to be out in the country. So it's allowed that flexibility of people to think, okay, I'm going to make a saving by doing it. But I think, the problem talking to a lot of mortgage advisors is their cash flow. It's locked up in those chains, and they really are struggling. So, as Robert said, it does create its own problems, but it's undoubtedly helped the mortgage market.
And I'm really grateful for the commitment, from somebody like LNG to put it on risk before underwriting, just to help us over the bridge.
Exactly right.
Oh gosh, yeah, it's an interesting question. We've obviously been writing a lot about it. It really dominated our news for quite some time, and obviously, as you mentioned, Richard, the regional differences. We're seeing a lot of data showing the sheer amount of people wanting to move away from urban areas and into the kind of countryside, or to prioritize the needs of their property. So it's a really interesting point, and it'll be interesting to see how it comes out this year. But yes, it could be a cliff edge again. Oh my goodness.
Again, you're seeing people when they're moving out of the cities, some of them are actually now looking at renting rather than buying, because there's a lot of myth in the marketplace that actually renting is, people only rent because they can't afford to buy. Actually, it's becoming much more of a lifestyle choice now. We're seeing much more people, the age bands of 35 to 55, who have got kids and are now choosing to rent rather than buy. And in fact, you're moving out of the city, the likelihood is your first step is going to be to rent. So make sure if you like the area or not. So again, it's helping all those sort of marketplaces that move away from cities, if you like, out of the country. Not great for us that live in the country, because we like our green fields, but can't have everything.
Great, thank you, Richard. So do mortgage advisors, this is an interesting question, sell enough protection? If not, where does any blame lie? Advisors, providers, clients, or all three? Sure, there's going to be some interesting responses to this one.
I think it's all the providers' fault. They just make underwriting so difficult. They take them through medicals, which take forever, and the advisor's totally confused because there's so many terms and conditions around the policy they can never work it out to sell it. Or you could look at it another way, and it's an interesting one where the one thing I would say is that for the last 30 years, everybody's recognized there's some form of protection gap. And I don't want to get too much into that or defining what it is. And we've been trying to work out ways of changing this and changing the way that the advisors look at protection and trying to get them to sell more. The one thing I would say is whatever we've done up to now, it ain't working very well. And so somehow we've got to change the argument, because everything that, and yes, providers are great at throwing training at people to tell them more about their products and how they should sell them. They've been brilliant at it, but that's not changed the paradigm at all. So we need to find a way, and I don't know what it is, and I don't think there's a magic bullet, not a silver bullet to this, but what we've been doing up to now hasn't worked. So we've got to find a different way of turning people on, both by way of the advisor to do more, and the consumer as well, to persuade them that this is something not just do they need, but they actually want. Now, I don't know how we do that. I mean, Aviva tried some really interesting advertising techniques a while ago, and we still see the occasional stuff of the ghost on the stairway, which does try to impel people to think about it. But between us, and I'm not going to, and it's not a blame game, it's about between us as an industry, we haven't made our argument compelling enough to want the consumer to really want, as opposed to us telling them they need. So we've got to find a way of turning that round. And we've got a long time to do it, or we've got a short time to do it. And we need to somehow find some urgency in our own breath, our own mind. And it comes back to maybe what Richard was talking about, just a bit more enthusiasm and care and commitment to say, you know what, this isn't about you have it or not have it. You just need, you should want this. If you don't want this, I don't understand you. That takes a lot of bravery as an advisor, though, because you've got to be old and grey like me and used to having arguments with people, as trade body heads do, to be able to have that type of discussion with a customer. You've got to be really confident in your own position in that relationship. That's really hard. And I get how hard it is sometimes, because you've got this one appointment, you know you've got 2 more today, you're focusing on something else, and then maybe Richard's got some good ideas about this.
Well, I do. It's one of the things L&G, I've been very lucky at L&G. They've given me carte blanche to go and do advisor training, which is exactly what Robert was saying. So a couple of years ago, we took the view that we were going to get CII accreditation to go and train advisors on sales skills. So we don't go out product bashing. We go out and talk to people about their duty of care, why they should do it, how you can do it, sales skills, all that sort of nice soft stuff, which we believe, if I can grow the protection market, L&G are going to grow our share. So that's just what we're doing, if we can grow that marketplace. And when we talk to advisors, I was doing a workshop yesterday for some advisors, and one of them actually put his hand up and said, I'm one of these people that you're having a go at, because I don't sell protection, and I know I should, but I just don't seem to have the time to do it. And we got into a long debate in this workshop, which took up most of the time of the workshop, actually, but it was really interesting. The rest of the advisors liked it. And it worked out that, we said to him, well, why don't you write less mortgages, but write them better? So we came up with this idea of the power of one. Now, the power of one is just about embedding something in a process. Whenever we do a process, it's just repeating the same thing over and over again until it's perfect. And so when you're talking to clients, so every time you talk to a client, you should have your process embedded. So the idea of the power of one is, say to an advisor, right, you only have one customer, okay? Design the process that you're going to maximize what you're going to get out of that client through the sales process. And that should then be your sales process for every future client. So you're going to say, how would you first do that appointment? How would you introduce it? Would you send them any pre-appointment stuff for them to have a look at? Whether it's ABI's Percy calculator, or whether it's some sales aids about, what does your employer give you as an income protection policy? And then how are you going to angle the mortgage sale? How are you going to talk to them? When are you going to talk about protection? You've got opportunities there of the mortgage itself. You've got the life insurance, income protection, critical illness, general insurance. How would you maximize the sale of that? And once you've got it in the process, it works. The problem you have in a process that's not embedded with everything in it, as soon as you start getting busy, things are going to fall off that aren't actually embedded in the process. I'll give you a really good example, and it's a little bit strange, but bear with me. I got a friend of mine who's a waiter, all right, and he sees his being a waiter as a career choice. He loves it. He thinks it's fantastic, and he thinks he's really good at it. And his boss recently got a new program which monitored the sales efficiency of his waiters. And he thought this guy thought he was great, but what he found out is during the week he was a brilliant waiter, because he had the time to talk to the clients and say, run through all the menu, the starters, the main course. He'd always had a pudding as well. But he found at the weekends he was 30% less efficient on the sales, because he was more busy. He had more customers in the restaurant, so he was running around a bit more. He didn't necessarily have the time to wax lyrical about what the chef had just created for the puddings. And so he was thinking, well, maybe we could make more profit by actually having a few less customers over the weekend. It sounds a bit strange, but it's true. Have less customers to do the job better actually will create better returns and better cash flow for the business. So sometimes I think as I said earlier about transactional, we look for the next client all the time. Let's just do the clients we've got better, and then move on. So for me, yeah, it's about embedding that process, and I'm trying to do, and my team are trying to do all we can to talk to advisors and say that you really do. I mean, we've had some amazing responses from some of our workshops, and it is that emotional thing that Robert was talking about earlier. Are we doing the right thing for our customers? if we're ladling them with a huge debt, it'd be like you taking your car to the garage, them servicing it, but not checking the tyres. And if you then crashed on the way home because your tyre blew up, you wouldn't be very happy with the garage. It's the same thing with a mortgage. If we're not doing that whole job for them, then I don't believe we're doing the job correctly. So I think there is an onus on all of us to make sure that we do the job. And I think, you know, we're doing our bit. Other providers are also trying to do that as well. You've then also got the networks now that are seeing it through, that they have their own in-house protection advisors now. So if their members don't sell it, they're told, well, if you don't sell it, these people are going to sell it. Because again, they realize the importance of talking to every client about the importance of protection. Now, whether they take their advice or not, but you have to talk to the client about it.
You have anything to say, Robert?
You're still stunned by my waiter joke.
I can't believe he's told the waiter story.
I know. I think it's a great. I
fundamentally agree. I mean, I go back to my advising days where you know, when I was lucky enough for a while to actually advise in the high net worth arena, and I only had 20 permanent clients, but they were really important people. And that meant that whenever I went to see them, I had to be totally prepared. I had to know everything that I thought they were liable to ask me, because I always had to appear as though I was in control of the relationship, because it was really important that they had total faith and trust and faith in me as an advisor. And it was really important that I presented myself as being really, really well prepared and committed to them, because they wanted to think they were the most important customer in my life. Mm-hmm. And that's the really important thing. If you can build that relationship where they actually think that they really matter to you, then you will get so much more back from that discussion and debate. And it requires a bit of investment in getting prepared and background and just thinking through your strategy for the meeting as well. What is it you want to get out of it, and how do you want to do it? And not just walk in thinking, oh, well, they want a mortgage, it will be okay. You have to be a bit more prepared, I think, than that, and make sure that you're driving yourself as the best person you want to be and the best advisor they want you to be. Because trust me, your customer wants you to be really good. It's weird.
You know what? I'll tell you what, there was an advisor down in Reading a couple of years ago. I was chatting to her, and she used to get really upset if the client didn't buy protection. She was a brilliant mortgage advisor, but she would get personally upset if the client didn't buy it, to the point that when she was leaving the appointment, she would always say, I'm really sorry I didn't do my job very well today. And the client would say, what do you mean you got us the best mortgage that we wanted, blah, 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 blah. She said, no, if I'd done my job properly today, you'd have also bought the life insurance or the income protection, or whatever the product was. And she would say, about 25% of the clients would say, well, if you really think it's that important, then maybe we'll have another 10 minutes now. Or she would get a phone call the next morning, because they'd obviously had a row over dinner, and said, we should talk to her about, she thinks it's really that important. We've upset her now because she was such a great advisor. As Robert was saying, they buy into you. And she didn't do it as a gimmick. She really did feel, because she said, I've let the clients down because I haven't established worth in the client's head. She said, if I've established worth in the client's head, then they will always try and buy it or try and take what I'm recommending to them. But if I haven't done that, it's my fault, not theirs, because I haven't explained it properly. I haven't used the right language. I haven't been enthusiastic enough, and maybe I haven't pushed them enough. But Robert's right. If you trust the advisor in front of you, I'm a scuba diver instructor, and I know that if my clients don't trust me when I'm taking them diving, then I've lost them. Same with the financial advisor. If you don't trust them because you're giving them all your financial wealth and everything else in their hands, it's amazing. I'm hugely enamored of financial advisors. It's a really hard job. I wouldn't want to do it. They go out there day and night trying to sell something. Let's face it, a mortgage is fairly easy to sell, because somebody comes to you because they want a mortgage, they want the house. They don't want the life insurance, the income protection, the critical illness, or they don't think they want it, or they don't know they want it when they come. And the advisor's got to try and sell them something, which we hope they will never ever have to use. But if they do, my God, it's going to change their lives. So it's hats off to them most of the time for me. They do a really good job, vast majority of them.
Absolutely. And from what I gather from that conversation, particularly, it's this quality over quantity approach, I suppose, and also changing that consumer attitude of, oh, you know, we'll never need it, so there's no point, you know, and that's quite harmful, because as you say, Richard, if it does end up being needed, it can be absolutely life-changing, and it's about communicating that message.
Well, we always say that you don't take out life insurance to change your life, you take out life insurance in case your life changes, and that's the main line that we try and get across. And again, it's just the language. A life policy is not going to change your life, or an income protection. But if you suddenly find you can't work due to illness and you've got an income protection, you just got to look at the 7 Families films that the Income Protection Task Force have put together. They're just incredible stories. These are people that didn't. They're not smug because they bought it. These are people that didn't buy it and wish they had, and they've been given the benefits by the sponsoring providers for a year to see. And if any advisor hasn't watched any of those 7 Families films, then just Google 7 Families, go and watch them, because they are really. And you can put one on your website. They're free. Again, advisors need to go and find this stuff to try and make it more relevant. Robert was talking about earlier about the protection gap. For me, the only gap that's necessary is the client that's sitting in front of you. You can say about the trillions of pounds across the United Kingdom, but it's only that client in front of you, and you need to make it very personal to them, and not just use generalities around the world.
Absolutely, and if anything, this year has proven it's to prepare for the unexpected, isn't it? So it's become even more important than arguably before.
And
I think you're right.
And a government that you know, as Keir Starmer focused on very quickly in response to the budget, hadn't dealt with the care issue at all. So we're still in a position where we have a government that knows that they've got huge issues sitting in the background on care and protection and all these issues, which are huge, I mean immense. And I doubt we'll get to a point now, given the tax liabilities that are going to sit across all our shoulders for decades to come, whether they'll deal with it adequately anyway. So the only way out is to find a way to use this industry to find a better way to protect your future. It's going to be the only game in town, I think, for people.
No, I think you're right. I mean, if you ask anybody if they could survive on statutory sick pay, which is 95-85 a week, I couldn't survive on it. But a lot of people don't know what. I think, you know, we've just completed our deadline for breadline research, and when we did that, when we first started back in 2012, a lot more people thought they could rely on the state benefits. What we've seen now is in the latest report, when we did the research just at the start of the first lockdown. Many more people now are realizing that actually they probably can't. They still don't really know what the state benefits are in any detail, because you don't until you probably go into it. But one of the things we've tried to do is make sure that financial advisors know what it is, so that, you know, when clients say to them, all right, I don't need any income protection, I've got sick pay from my company, is to say, what do you mean 95-85 a week? And they say, what do you mean? Well, most companies will only pay statutory sick pay. They might tell you they got sick pay, but they're only paying you statutory. So I think according to Mintel, there's only about 4% of all private limited companies that have, or private sector companies that have an occupational income protection scheme. So again, once a client understands there is a risk, then they're much more likely to protect that risk. One of the things we've done in recent surveys is, and it came out in the deadline to breadline research, is how many people think that what their biggest asset is. Do they know what their biggest assets are? If you ask any client out there and you say, what's your biggest asset? If I asked you, you'd probably say, well, it's my house or my car or my pension. Actually, it's your ability to earn an income. You take the average person, according to our Office of National Statistics, average salary is about 35 grand at the moment. Take an 18-year-old working to 65, that asset is worth about 1.5, 1.6 million pounds. Yet we don't insure it, but we will insure the cat. We're probably 4 times, according to our research, 4 times more likely to insure the cat than we are our income, 6 times more likely to insure the contents of our house than our income. It's just dark, but I think people just don't consider it until they go and talk to a financial advisor. They don't think about the risks they've got, and that's what advisors' jobs are, to put a client in a more informed position so they can then make a decision about what they want to do about it. We can't force them, but we need to put them in that informed position.
Since they've now all worked out they don't have to go to Starbucks or Costa every day, they've got a lot more money to spend on protection.
Exactly.
Exactly. Fantastic. Thanks, guys. A final question here. So what more could insurers do to help brokers understand and sell protection? I know that we've kind of touched upon this already, but it would be great to have like a summary of recommendation.
Go on, Robert. Tell us what we should do.
Well, well, it's an interesting one. So when Amy stepped back across, or stepped into with gusto in the protection arena last year, I thought one of the things that I might find hardest would be finding, believe it or not, a trade body to work with. But actually, in the last few weeks, the ABI have welcomed us with open arms and started a communication with us and a dialogue and regular meetings, which is really, really positive. And I really welcome that, because in the mortgage arena, we have a range of trade bodies, whether that's UK Finance, IMLA, or the BSA, that we have great dialogue with, and we can go to talk to them about issues and developments and try to work out shared issues about how we take the market forward. And I'm really gratified that the ABI want to partner with us on a range of stuff. And there'll be stuff we're going to disagree on. Of course, there are. The providers and distributors are never going to agree on everything. But there's a core stuff of 75–80% in the middle that are actually common, real big agenda issues that we can talk and work on together. And so I'm really gratified that dialogue has now started, and we'll begin to work, I think, better together, talking about what it is the intermediary community wants from the insurance community, protection community, and what they want from us. And there's some work being done at the moment, particularly around Johnny Timson's work around, he's working on behalf of Number 10 effectively, on vulnerability and capability and all the stuff around this. And there's more work to come on this as we go through this year that I'm aware of, that we're going to be part of trying to get out into the landscape. So I'm really happy that I think we've got a whole host of providers who are trying to do the right thing. There's some things around this that came out of the ABI research, which are particularly around claim stats, where customers really don't believe the claim statistics. And I've seen stuff out of Australia where they produce claim statistics in a greater degree of granularity, which gains a greater degree of customer trust. So I suppose the one thing I'm actually looking for is, what is it that we can work together on to partner to get more data and information out there that persuades customers that's actually worth buying this because it's got real value. And that, I think, is work we can do together as an industry to try to change the paradigm or the structure or how it's perceived. Because this is broadly a distributed industry. Yes, a lot of the insurers have got direct sales, but most actually want to sell through third parties. And therefore that partnership has to be really strong. And there's got to be trust in that partnership as well as trust with the customer. And we've got to migrate that through somehow. And we've got to build better faith. And the insurance industry, God bless it, in its widest sense, doesn't have a great reputation, because whether it's car insurance or travel insurance or some of the stuff around business interruption, insurers don't have a great reputation with the public. But in our part of the set of the industry, on life, on critical illness, on income protection, we've actually got a really good story to tell. But we have to find a way of ensuring the customer understand that this is the good bit that really does work and can make a difference for you, as opposed to other stuff where there's a lot of rogues and vagabonds who will try to rip you off and not do the right thing and hide behind terms and conditions. This part does not hide behind terms and conditions in the same way. So we need to somehow help customers understand that, help advisors have the right tools to deliver that, and work together in partnership. So I'm not going to disagree with him, but what I'm saying is we need to think also about our whole reputation as a sector, about how we work better to enhance all of that in the consumer's eyes.
I'd agree. And what's pleasing to me as an insurer is that over the last, again, 5-6 years, I think this trust argument, we always used to be one of the top 3 reasons that they didn't want to take out life insurance was I don't trust the insurance company. That seems to have really fallen down a bit over recent years. And I mean, I don't think as an industry we make a most of it. Did you know that in 2019, according to the ABI figures, the industry itself paid out £5.7 billion to the UK economy? You never hear that figure in the newspapers. You don't hear that 98.5% of all claims are paid. What you hear about is the 1 or 2 cases where we haven't paid out because somebody is non-disclosed or there is a good reason for it. Insurers want to pay every valid claim. And so what we're trying to do with our claim stats this year is pay less attention to the high level figure, i.e. the 97% that we paid out or whatever the figure happens to be, but actually concentrate on those few that we haven't paid out and explain why we haven't paid them out. Because we weren't told. Somebody told us they weren't a smoker and they died of lung cancer. The onus is obviously on the insurer to prove that the client had lied on the application form, but it's this non-disclosure bit. You know, when you get your confirm your details form, advisors need to tell the clients, this is really important. If you don't check this, they may not pay out. And we don't want clients not being paid out. It's a horrible conversation we have with clients when we don't. So for us, we would love to have 100% payout rate, because that's what we're here for. We want to be here at the moment of need when a client really needs us, not to say to them, sorry, but you didn't tell us this particular thing, and that's the reason that, you know, we can't pay the claim out. It's a horrible situation. And those are the ones that get in the press, not, you know, the 5.7 billion figure, which, you know, what has that done to the UK economy? Massive impact on all those families that those policies have helped, mainly because financial advisors have been out there and told clients to buy it, because it's not an organic thought process. We don't wake up in the morning and say, you know what, I've got a gap in my financial resilience plan, I need to go and talk to a financial advisor. It doesn't happen. If it does, you're dreaming. It happens because an advisor nudges a client and gives them some advice. And Robert's right, yeah. Advice through a financial advisor is fantastic. They are qualified, and they give that advice. They talk about the trust that you need to be put in. You need to explain. I mean, critical illness nowadays, you need a medical degree to work it out. So actually, it's really complicated stuff. It's not. Some people look down on protection advisors, but I never have, because as I said earlier, it's a difficult job, and you've got to be proud of it. You've got to be enthusiastic about it. I mean,
I hate to sell critical illness, Richard. It was hell to sell. Hell to sell.
Exactly. Trying to explain 97 conditions or 100 conditions, whatever. It's just, income protection is much easier. You can't work, it will pay out.
Exactly.
But for me, it's about the stuff that we want to try and do is work with advisors and networks and trade bodies to try and make sure that we educate. I think it is education on all sides. It's educating the financial advisors why they should do it. It's trying to get some stuff out in the press to get clients to it, and try and get rid of this negativity that sometimes is a way. But you sometimes go, I was talking to an advisor the other day, and he was saying the client didn't want to do a policy with Legal & General because we didn't pay out a household claim on them for years ago. And you can't help it. It's just sometimes insurance. My dad was a typical one. He's all insurance companies. They always take your money and never pay out. I said, have you ever tried to make a claim, Dad? He said, no. I said, well, and that was my father. So bless him. But yeah,
you sold them lots of bad policies, Richard.
I did. I was dreadful.
I think what came up in there that was really surprising is that reputation point. Obviously, there's a few areas of industries that have had to really overcome a reputation, but you know, it's interesting to think that this side of the protection industry, so to speak, have had to really try and avoid, like, almost depart themselves from those that, you know, their reputation that they may have. And I wonder if that's a day-to-day thing where people are faced in this part of the protection industry, whether they're faced with that sort of criticism, with people that saying that distrust. Is that actually kind of a day-to-day issue, or is that something that, as you said, Richard, is now starting to really ease off?
Robert's got I don't know if there's a snarl or a smile. I think this is where we probably disagree. You say it's got better. I'm not sure it has, because I still think that consumers almost don't differentiate between banks and insurers, never mind, and just see financial services as something that they don't really want to talk about very much. We're a necessary evil that gets in the way of all the things they actually want to do. And so, you know, our research kind of said that there's significant distrust of whether people will pay. Now, you know, I can argue whether it's going in the right direction or not, but the number was so big that it makes me think that's a barrier to overcome. There's a hurdle there that I've got to, if I'm an advisor, I've got to get over that hurdle before I get to the good bit. And that's part of the issue for me, is how do we make sure get rid of all the hurdles, and then the job becomes easier. The other bit of the hurdles is the other part, which is we're doing a lot of work at the moment across the industry to make that end-to-end mortgage process as seamless as possible from a technology perspective. What we need to also start thinking about is how we build the protection element into that technology journey as well. And we're going to have to talk to the big providers about how we make that work effectively, because if we don't get that bit right and put it seamlessly into the end-to-end tech journey that the customer is going to go through with the advisor, and it then becomes an add-on bolt-on, it just will not happen in the same way. It's got to be an integral part of the process as opposed to an add-on. We've got to think about how we maybe get the big, and because I do still think that tech will end up being built around some big sourcing systems or criteria systems. That will be there'll be a CRM system that bolts into a system, a sourcing plus criteria system that then does the application work. Somewhere in this CRM into sourcing it can't be just mortgage, it's got to be protection at the same time and seen as a package. And we've got to build that and talk about that as we're really going to get this right as we go forwards.
I think that package thing is so vital. So I always refer back to stories I've had from my financial advisor, because that's the only time I learn anything. But there was a guy in London, and he used to, when he talks to his client about the mortgage project, because let's face it, when you do stuff at home, and it's a project, whether you're going to build a chair or clean the garage out, it's your project, isn't it? So he would always say to the clients when he's talking to them, okay, I'm going to help you with this project. I'm going to get you the best mortgage. And of course, that's going to include getting you the top rate I can for the period we want. It's going to fit your budget. And that's going to also include making sure we insure the house, the contents, and your life and your income. And he used the word of course very deliberately then. It's, again, I'm a great believer of using words in very simple ways. He used the words of course because people don't do this every day. And so they think that's what happens. And we are a herding animal. We don't like to stand out the crowd, which is why everybody always orders a medium coffee. Right? You don't want to be seen as a greedy person taking a large one. You don't want to be stingy by taking, you always order a medium one. Data's always proved that, research proved that. But he uses that word of course, because then clients say, oh, that's what I've got to do. And by making a package, then budget goes out the window, because he knows what the budget is for that whole package. So everything gets included in that. So then he's bashing out the objections that clients may have about insurance or cost or premium. Robert said earlier about one of the reasons people say they don't want insurance is they can't afford it. If you're looking at a life insurance policy, I don't know, 10, 15 quid, our average one is £30. If you can't afford that, then you probably can't afford the mortgage you're taking out, because if interest rates move by even 0.25%, and I'm talking with somebody that remembers 15% interest rates, you're not going to be able to afford that house. So actually that 30 quid is neither here nor there. Maybe you should give up the Sky TV or the mobile phone that you've got or whatever. So actually, it's how you talk to people, in my view, that can really help and bring some reality. It's perception, and Rob was right that the claim thing and the trust it's not as well as we'd like it, but I do believe it's going in the right way. But it is a perceived issue that is in clients' head. It's not a real issue. If you look at the stats and stuff, as I said earlier, we pay out a huge amount of money, but we've got to change that perception in clients' heads that actually we are trustworthy. We do want to do the right thing by all of our customers. And we wouldn't have been around since 1836 without doing that. So let's get rid of the perception and get some reality into the world.
Absolutely. Fantastic. Thanks, guys, so much. That was excellent.